How to grasp the next trading opportunity after the Bitcoin plunge. If you are interested in this question, please follow me. Let's look at the daily line and we can find that we are after the plunge. Actually, let's take a look. We are in at the moment of the slump. We actually inserted a very long lower shadow line. This lower shadow line, we will catch the part of its rebound and its lowest point. Of course, what we are looking at is the spot price. Futures are even lower than this. $1,000. If we use the spot price, the lowest point is around 25,200. Then our closing price, let's check again, is more than 26,600. So there is a gap of $1,400 every time. Even if it rebounded by 1,400 US dollars. As far as futures are concerned, 1,400 US dollars is also a very large profit. In fact, our rise in this period is not formed by real demand for purchases. It is just that it's just the rebound formed by the short position closing of futures. So you can see that our follow-up, the next decline, he slowly filled up the original part that had no replenishment period. In fact, after our decline, it has been mentioned that we have a very chance that the real part of the K-line will come back in the next few days. And we will come back to the position we hit on the needle tip, which is about 25,000 US dollars. To confirm the trend, it will probably be like this. The trick is that we will come back after the shock and step on the low point we made before. Is there any possibility of a rebound in the middle? In fact, we can take a look at the range of selling goods. In the past few times when we faced this level of decline, in fact, we also had this kind of rise caused by short positions. It can be seen that when we were in the past, we had exactly the same situation again. And it rebounded again. But this rebound did not affect or threaten the entire downward trend at all. And the decline in places like ours before did not affect it. The rebound of the original downward trend does not affect the downward trend, because it is just a short position closing. So why did the short position attract such a large wave of liquidation? Short position closing is buying out of thin air. It is created out of thin air rather than real demand. So why do so many people choose to close their positions? Because the K-line we fell very fast. Even when we fell the most, it took 5 minutes to complete the decline. This group of short sellers will make a large profit. When they make a large profit, they will think about closing their positions. This power will cause this wave of rise. Let us distinguish a little bit. In fact, we were at that time. The rise formed in this kind of place is formed by the accumulation of real demand. So later on, you can find that its rebound has a relatively large rise. And this kind of rise that is really formed by demand must have this as his most obvious performance. If there is no such thing, then it will be difficult for us to make this kind of inference. I think the K-line like the latter is also very classic. It is really a K-line of demand. Then you can see later, he then caused a wave of rise that deserves our attention. What if we miss the market? For example, I missed the market. In fact, I missed the market. Although you may see others making money. But in fact I think the most important thing in trading is not to lose money. Because as long as you don't lose money, there will always be opportunities. It can be counted on 5 fingers. But as long as we still have the principle and strength, we still have funds, we will definitely have a chance to seize it. But if the money is lost, then the real opportunity comes. Or when the time is ripe, we will not be able to grasp it. So in fact, I think the most important thing is to control the risk. As long as there is still the principle, there is definitely a chance. Let's see if we still have to grasp it. I think if we have a chance to rebound, it will be a very, very good time to sell short. In fact, the best short order is not in the first wave of its decline. It must be created when it rebounds. When the second highest point is reached, the best time to go short is the best time to short. Some people may not escape the top of the spot. The best time to escape the top is actually when the second highest point is created. Our past bull market can be confirmed. For example, like the first wave of decline when we were in the previous position, it is actually more difficult to catch. Like the first wave of decline in the previous position. But we will have a chance to grasp the rebound. Or we are on the weekly line. The first wave of this kind of plunge may not be so good in futures. And there is no chance to seize it. But we will seize it in the first wave after the rebound. When the second wave of decline rebounds, it will be a very, very worthwhile opportunity to enter the market. I think we are no exception now. I think we have just fallen and we have not seen demand or rebound yet. If we want to go short, it means to go short to our original position of the needle tip. Then this position must be placed very, very small. Because our current price is no longer good. And the entry price is no longer good. So what if we have to wait for a better price? We really have to wait for him to have a better rebound before we have a chance to make it. The current market is going like this. It must not consider any form of strong rebound. Thank you very much. Everyone is very welcome. Why? Oh, you can help me click like, subscribe. Share, open the small bell. It is the biggest support for me. Thank you very much. Bye-bye.